All right, everybody, welcome back to Mining Stock Daily, London Metals Exchange Week edition, where we have a number of interviews scheduled this week on a very busy week. It's always very busy this time of year as a number of people come into town here to talk all things metals and what's happening in markets, specifically, obviously the metals and mining space, but obviously macro, obviously driving the tail here with everything in this just incredible booming market we found ourselves in here in the last 18 months. My first interview this week, happy to be welcomed back into Hannam & Partners here in London, big financier of resource equities and companies doing good work throughout the world. A couple of years ago, it was the first time here, I sat down with Jay Ashfield, who is sitting across the table from me now. So Jay, thanks so much for welcoming me back.
Thank you, Trevor. Glad to be here.
I'm glad it didn't scare you off.
Yeah.
Listen, we're going to talk all things markets, what Hannam's been up to, a number of items on the list that we need to tackle. But since it's been such a long while since you and I have chatted, maybe give us that big view of yourself. What does Hannam do, and really what's kind of that niche that Hannam is set foot here in this sector?
Sure. Yeah. Thanks. So I guess since a couple of years ago, our firm merged with a debt advisory specialist called HCF, or Hatch Corporate Finance. So in addition to what we have always done in terms of being able to advise companies doing M&A, sales, research, public, private, fundraising, et cetera, now we're very strong in the debt market. So that's, proper project and bank debt, going through, kind of the low cost opportunities, which typically take a bit longer. So it's a very good compliment. They're a great team and pleasure to have them. And I guess, the markets, very different markets that were
2 years ago, the last time you and I said.
Yeah. I think geopolitics started to play a role back then. I think they're even more so, probably in a slightly different manner. But yeah, I mean, pretty lively market that we're in terms of the commodities.
Yeah. And you're Canadian that work here. So I should say happy Thanksgiving, by the way.
Yes, thank you. Happy Thanksgiving. I couldn't find a turkey, so I had a duck last night.
Oh, very good. Are you celebrating other than working here in the office?
I'd like to think I could, but it's LME week and back-to-back and dinners and drinks. Exactly.
Well, and I'm grateful for the time that you can give us. I know it's a very busy week. All right, we mentioned completely different market than the last time you and I sat here 2 years ago. And there's almost too many things to talk about. We can go down the precious metals path. We can go down the inflows of capital coming into precious metals. We can talk about rare earths. We can talk copper, all these things. But if you kind of watch this, big picture summary as a whole, are we in a cycle here that now has legs to move for the next multiple years?
It certainly feels like that. I think what the Trump government or Trump himself has really set alight, or I guess made everybody realize, is China does really dominate all things non-precious metal, in the sense of they have, pure dominance in rare earths. Any minor metal with regards to defense, AI. Yes, it was probably EV metals last time that we were discussing as the hot topic, or what everybody's focusing on. Defense and AI, far, far bigger theme today than anything EV metal. So we're seeing it based on, what Chinese are trying to ban in terms of exports of both raw and processed materials, and any, ancillary type of product like chips and software, that sort of thing. So that is really what's driving a lot of the kind of minor metal boom at the moment, and where the US government in particular are now really putting their capital to work. So not only are new pools of capital like crypto in precious metals, or gold in particular, but government capital really coming to the forefront.
Yeah. When did we make that jump about, this reshoring of supply chains has been of interest for a number of years now, and I think that's not new, but somewhere along the way, we went from reindustrializing or resupplying the supply chain to almost remilitarizing the supply chain. Is that a recent transition, or is that something you felt was basically the next, domino to fall?
Yeah, I mean, if you came across a tungsten or antimony or any of these sort of deposits even 2 years ago, you couldn't give it away.
Right.
I mean, we worked on a couple, so we're kind of mindful of what was happening, but the price wasn't moving. There wasn't urgency. There wasn't knowledge of what these metals actually do. But with defense spending going through the roof, with China banning certain exports of these sort of materials, the prices have been forced to move. The US is talking about restockpiling of these metals because of the importance of it. Yeah. So it's more coming into the forefront because of political decisions.
Yeah. The rare earth metals, it's always been a very, very opaque market. It's hard to find what spot prices are for these things. Are you finding yourself more inclined in researching? It's like, okay, what is scandium doing today, or yttrium?
Yeah, I think the focus on which minor rare earth price, that's very kind of retail dominant. I mean, I get asked a question, oh, what does this one do and what would the price be?
Yeah.
To be honest, any rare earth mine or processing facility, they produce a large basket of these. Yes, certain ones in particular will dominate the mix if it's heavy, light, what the price is doing. But we, to be honest, don't spend a lot of time on that. And in particular, there aren't many companies producing them today. Where will the price go when things do settle out? Things will eventually have to settle out, as we've seen in countless cycles before. Yeah. How long will this cycle of, just kind of everything going up and going bonkers?
So how does an institution like Hannam go out and start doing valuations on these metals? I mean, there's obviously, it feels like there's a little bit of a safety net because, like, oh, well, the U.S. government's got our back. Doesn't really matter. But at the same time, like, you can't just, wildcat your capital.
No, absolutely. And I think, doing this for quite a long time, rare earths can be quite a dangerous market.
Yeah.
Difficult, spot to actually make money apart from in the short term. So, the U.S. government is going big into rare earths. What they're doing with MP, what they're doing through, the DFC and others in terms of going into individual projects. But it does take a long time for a mine to, obviously either be discovered. There's a lot of them discovered, but in terms of going through the permitting, in terms of going through the build, raising capital has always been an issue in the rare earths because not many institutional funds understand rare earths and have seen the cycle and have seen, where prices probably need to be for it to make money. And then, it's not like a base metal or a precious metal in terms of the processing and the whole supply stream after you mine it.
Yeah, well, the processing still is kind of that unknown.
Yeah, and it's still China.
Right, it's still China. Do you have any signs of maybe life on the other side that there's headway being made with processing?
Yeah, absolutely. There's a number of companies who have been building supply or downstream, in UK, in the US, in mainland Europe. However, this has more been on the recycling side first, anyway, and then secondly, I guess. There's one up in the UK in terms of a rare earth refinery, but these mining projects do take a long time to come on stream. The first instances of most of these projects are still going to China because that's where the infrastructure is, and there's been quite a lot of kind of failures in the space in terms of previous cycles and not getting it right.
Yeah. Is the narrative on the cover of this whole thing, are we weaponizing the rare earth market between East and West right now?
Absolutely.
Yeah.
Without a doubt. I mean, look what China did overnight, adding 100% tariffs. And it's, I mean, largely around the rare earth side.
Yeah.
Or threatening 100% tariffs.
Yeah. But it seems like, again, this is not something you can just maneuver quickly about to provide that supply, at least on the West side, right? On the Western Hemisphere side. So you can't just flip a switch and say, all right, well, we'll be good to go.
Yeah. I mean, look at how long. So one, it takes a long time to discover, permit, build a mine.
Mm-hmm.
On the refining side, there's, I would say, even longer given what permitting for a rare earth facility is, given, well, essentially the radiation which a lot of the rare earth contain.
Yeah.
So, there's one in Estonia, been going forever, but try to permit a new one in kind of any other European jurisdiction.
Yeah. That's amazing. Hey, so where's the opportunity here for a company like Hannam, or even just, an investor that's looking at this space and knowing maybe cycles pass, like rare earth cycles come and go with the wind. It happens quickly. There's an opportunity. Like if you're quick, you can make a ton of money if you follow the cycle. But you can also lose a lot of money if you're late and don't cash out when the timing's right. So what's the opportunity now for investment? But on the flip side of that, this definitely feels like it's not something that we could wake up tomorrow and be like, all right, well, back to normal, supply issue solved.
Yeah. So, focus on, and again, this was kind of the uranium trade a couple of years ago, where there was a lot of projects which were mothballed or put on care and maintenance, which, obviously very advanced, were producing, which will come back quicker. So the rare earth market on the mining side, there has been a number of projects which have been around for a while, which are at a feasibility study stage, a feed stage, ready to produce, which can be turned on much quicker than somebody going to, just in the ground, explore early days. However, the Australian market is another beast where, you can get a few $1 billion market cap if you discover a new deposit.
Yeah.
Because, there's still a market for, new, big, exciting deposits to be found. And if it hadn't come into production yet, there's usually a reason for that, whether it be tough metallurgy, tough geopolitical permitting, whatever it may be.
Yeah.
But so, I guess there are a couple ways being advanced deposits, or something that kind of has a sniff of something kind of that could be big.
Okay.
In the right jurisdiction.
Yeah, absolutely. So obviously there's opportunity here. And opportunity in the rare earths, I mean, that is the headline right now, in which, awkwardly enough, it kind of is like a sub-headline is the gold price, which as we speak today is making another new all-time high. I mean, this thing is just running rampant, and to my surprise. And it's one of those things to where there still continues to be even opportunity on the precious metal side. Yeah. The easy money feels like it's been made. If, people who were like buying when nobody wanted these things, or even investing in gold when nobody cared, are finally, being rewarded. The companies that, 2 years ago when you and I were talking, when things were not great, but those companies that put their head down and continued to do good work, were able to raise money and advance projects, are now being rewarded.
Yeah. Big time.
Are you seeing, are there opportunities left in the gold space? Because what I'm not seeing is like IPOs flying off the shelf in precious metals.
Yeah. I mean, there's, a new issue every day, every second day.
Yeah.
I think money has flown into the space, whether it be into the physical, which we've seen, new asset class buyers of the metal, but also on the equity side. A lot of opportunities, I guess, have been coming from the majors, in the sense of a merger and then creates subcos, or a new merger creates a new vehicle and new capital is being attracted to it. I don't think the list of big private gold companies ready to list is very long, to be honest, because either the private market is funding you, because actually private capital is still very abundant and ready to deploy. Or you sell themselves to another company who has access to capital immediately, where you want to tap the market rather than go through the 6 months of listing and whatever, what have you. But there's definitely a consolidation market, and both privately or publicly, there's plenty of capital for the space. And the companies that are enjoying the gold price the most is those who are in production, however small, with development projects down the line, or there's seemingly more companies that I've seen recently with a little bit of production have another growth project or another 2 growth projects, and it's they're able to realize this current amazing gold price. And the margins are fantastic because energy hasn't really changed in terms of generation or consumables. The only thing that has is on the kind of a royalty side, if they are gold price linked, which many in Africa are.
Hannam worked on big merger out of Sweden and Finland.
The Nordics.
The Nordics as of recently. And I actually used that example. I'm always trying to think, okay, where are things getting too hot in this cycle? Where are they getting too much froth? And I actually use it. I used that deal in my own kind of thesis here. It's like, okay, well, you originally went out and looked for $30 million. You got more than double that. And I made it in the back of my mind. I was like, oh my God, this thing's like running way too hot. Because I always remember lessons learned, like when in the fall of 2020, where there was a ton of new IPOs, fresh capital, like everybody could raise money. And that really, like once those warrants came off, that's really was when things topped, and we were, and we spent the next 3 or 4 years in the bottom. And I actually used that deal that you guys did. It's like, maybe things are running too hot here.
Yeah, I mean, I disagree with that one in particular because it's now a company of relevance.
Okay.
Both companies had assets which were largely underappreciated by the market. It now has scale, a new management team, a focus, and they're capitalized to get drilling. And the market is rewarding drilling and success and developing projects.
So my question really with that kind of, using that as an example is, where are we in M&A cycle? Where's the opportunity here for companies like Hannam to come in and start doing more consolidation? And then where you sit, where would we look like as, retail investors be like, all right, Hannam just did this deal. And that's a lot of froth.
Yeah. I mean, I think
sorry to put you on the spot here.
Yeah, I think everybody agrees there's a lot of froth in the gold space. I don't think valuations from a NAV perspective have really got to the levels where we've seen in previous cycles.
Okay.
So either back in the day, Agnica was on close to 3 times NAV, 25 times cash flow, et cetera, et cetera. We're definitely not there. Where there's opportunity is going down market cap in terms of where there are very good projects which will either be funded to develop in the short term or be consolidated by somebody who needs to grow. So what we've seen both in, I guess, the gold space as well as the diversified mining space is companies are moving away from capital returns to shareholders vis-a-vis share buybacks and dividends to growth. So any of these companies, nobody's been developing long-dated projects. So they're having to buy, having to consolidate. Like look what Equinox did in terms of, Caliber has kind of gone on their path,
Right.
merged, created a new Canadian dominant vehicle.
Yeah.
I mean, there's a lot of other companies with big assets in Canada. There's a lot of companies with big assets in Australia. Two big areas of consolidation in the last 12 months. And I can't really see a reason for that to stop.
Mm-hmm.
There's the smaller cap or the development companies are still trading pretty reasonably, I would say.
Yeah. Do you find it a strength now for companies to be jurisdictionally focused? You mentioned the Equinox deal. And once that acquisition of Caliber was presented to the market, their whole focus was be really Canadian first gold production, right? And then we see them unloading the Pan mine. So now they still have an asset in California, which is pretty meaningful. They still have stuff in Brazil and Mexico as well. Nicaragua. But the branding of that has been Canadian focused.
Yep.
Our friends in Integra Resources continue to be U.S. focused. You were working with Heliostar being Mexican focused. Yep. We were talking about that before we press record. Yep. And so,
go Reds.
Is there strength in basically bringing gold production or just mining in general, mining companies that are specifically jurisdictionally focused right now, or does it even matter?
It does and it doesn't.
Okay.
So I think in some ways it makes more sense in the copper space as an example.
Sure.
So if you look at, Teck and Anglo, it makes sense more from the synergies basis on that.
Yeah.
I think companies are doing it more for the market rating or multiple in which they want to attract. Essentially their valuation. So, if somebody wants to create a Canadian only focused vehicle with growth, you're probably going to be priced better than a Brazilian similar company or a Mexican similar company or a West African company of sorts. So it's, and that's what Australia has focused on in terms of growing resources, growing production. It's not for synergies.
No.
It does help in terms of focus, but I think it's more for the multiple side. On the other side, we work with companies who are, one has an asset in the Philippines and another asset in Nicaragua. The benefit for them is not a single asset jurisdiction company. So production from two different places. The way mining companies are generally run now is you have a very strong local team in each of the jurisdictions and a capable topco company who manages everything. So I think it's good to have more operations because that reduces the risk.
And financing partners that can jump lawyers.
Correct, exactly. But where, I think Caliber had to educate the market is look at how much cash flow we're pulling out of Nicaragua, and therefore it should be treated equally as our US and Canada. I think the market was always a step behind that.
Yeah. There was a lot of kind of mixed reactions to that deal. I, for one, was super excited because I was a shareholder of both, I might say. But when that deal was announced, I was like, everything actually played out the way I thought would happen because the Caliber team, serious mine builders.
Yep.
And it was obvious that Equinox needed help with operations. And I think things played out, and we just saw Q3 production numbers. Things continue to look like they're improving. Their mining output improved, the production improved, milling, everything continues to look good. So, that's obviously not a question.
Now, working with bigger scale assets are generally easier than a handful of smaller ones.
Yeah. All right. Well, kind of on the same line of jurisdictional questions, let's talk markets. Because 2 years ago, you and I sat here, we could have pulled up the TSX Venture Composite chart. It looked
Left for Dead.
it's awful. It was so bad. It continued to be the worst looking chart in the world. Not so much. I mean, things obviously have really picked up. The metals prices and the inflows into mining equities have certainly done a majority of that lift on the TSX Venture. It doesn't solve the problem though, because in the meantime, we've had companies redomicile outside of Canada, even drop Canadian listings and maybe focus on a US listing.
Yeah.
So there's still work to be done to maybe clean up a little bit the Canadian market, if I dare say so. I know that's going to upset some people, but it's in a much better position than it was 2 years ago.
Absolutely. And, performance really helps that.
Yeah.
I mean, if a generalist Canadian investor is looking at their screen and their, target performance, which is now being dominated by resources, they're underexposed. They're going to have to put more money to work or do essentially more involvement into the space. And I think, that has helped the general resource equities, and the capital, which is now going into the space, is that it's not all just traditional, mining funds, which are, involved now. So people believe in the rally. They know what's, the basis of the momentum. And, it's helpful that new liquidity pools are playing. And, to be honest, the addition of the life offering in Canada has actually done it wonders.
Yeah. Oh, they adjusted that quickly when they realized how popular it was.
Yeah. Well, it would have been a big missed opportunity if they hadn't, but it's been, phenomenal.
Can you walk us through, I mean, maybe a high level, what the life offering provided to investors, how it was adjusted, and really how much liquidity has that just brought into the venture exchange?
Well, from zero to, now you're seeing, 30, 40 million going into something which doesn't really need a big prospectus or a shelf or, any of the regulatory work. So what it does for international investors in particular is remove the 4-month hold period, which has been a pretty big deterrent to participating in capital fundraisers. So, it's always been tricky for an international investor. Might love the company, but I have restrictions in my portfolio which I can't have locked up for 4 months.
It's made your job easier?
Absolutely. I mean, we as a firm are probably busier in Canada and Australia or other listed jurisdictions than the UK. I mean, it's definitely got busier since the precious metal run.
Sure.
But also linked with the life offering, I'd say.
Yeah. How does it stack up with, are you seeing the same activity here in London on the LSE?
No.
The AIM?
Absolutely not.
What is it? What's up with you? What's up with these people? What's going on?
Well, I mean, London has had its challenges for a long time, I would say, in terms of just being labeled a dinosaur market.
Mm-hmm.
In terms of having the pools of capital here, the funds are a bit more flexible in terms of US tech is flying. Why don't I just focus on that, and I'll have, I mean, even from the UK pension funds might have 5% in UK equities. It's, less growth companies, I would say, than what it used to be and what the AIM market was kind of designed to do. You have big global listed companies going to other exchanges because of, the regulatory framework here.
Mm-hmm.
You're having more delistings, take privates here, even in the, global mining space. We had BHP in the share class, Rio being, targeted in terms of activists for that. Thankfully, Anglo Tech, as part of the merger, will remain here. Anglo did spin off their platinum portfolio to list in London, but since Russia, Ukraine, all the Russian companies, which probably took up half of the large
Yeah.
company lists are gone. So it was kind of a hollowing out period, which hasn't been rebuilt.
Yeah. Is there a role for Hannam in this continued depressed London market, given that the general global market is absolutely booming, like it's the wind to your sails, but this specific exchange?
To be honest, we are busier on M&A and take private than new listing in London. So, I mean, if we look at the gold space in particular, plenty of money around globally. There's no benefit for, or a decreased benefit for what used to be a TSX company. Oh, come to London because there's loads of capital here.
No return.
You don't need to. There's tons of capital in the TSX market. Australia, same wise. But the reverse is still happening in terms of London listed companies going elsewhere to dual list.
Yeah.
Not because the capital isn't here. They get a better rating elsewhere with probably more capital here and now. So it's thankfully for our business, it hasn't really taken away because we play in all pools.
Yeah.
But it's been real tough for the London brokers and people who really just focus on the London exchange.
And then what I'm about to ask, I know, is a very loaded question, and I hope we can a little bit editorializing and some history to it. But where did the London exchanges go wrong?
I think there was a period, particularly on the AIM market, of not very good quality companies. There's been a period more from, and this is being debated in Parliament and around the UK, of funds here and the setup. If you look at Australia, just as an example, the superannuation scheme, is fantastic for the company, the liquidities, everything, because of how much capital has to go into the market every month. It doesn't exist here. You're limited in terms of your kind of tax carve-out capital.
Yeah.
You're limited in terms of actually what can go in there. It just hasn't changed with the times. And because of that, liquidity follows liquidity.
Yeah.
Which is elsewhere.
Yeah. Oh, it's just kind of a shame. It's just such a historic area for, finance, for anything, right? When you think of how much capital through natural resources and commodities has always exchanged hands and built businesses on the completely global scale, other than New York. London's been it, and it has just.
It's still the hub.
Yeah,
it's still the hub,
which is fascinating. That it's
just not on the. It's just not on the exchange.
It's just absolutely fascinating.
Yeah.
What I kind of asked you a little bit here a couple questions ago about kind of the role. Is there responsibility for an institution like Hannam to maybe bring back capital into these markets? And I think you definitely answered that as best as you could. But on the big scale here, what is the role of finance institutions like Hannam in this market right now? What does this team feel their responsibility is with the companies that you work with?
We are very much a firm with a kind of long dated history with our clients. We like to grow with our clients. We won't just be there for the cycle. So in terms of, our portfolio of clients, it's not just a bunch of gold companies because gold is hot. Yeah. We want to be there thick and thin through, the cycles and be there to support and give, the unbiased advice. And if the right advice is delist London because it's not giving you what it should, or buy this or sell that, or whatever it may be, we'll give that advice to the company because, I mean, we're a global business. Yes, we sit in London, but we won't give the wrong advice just because we want the company to stay in London.
Yeah.
I mean, it's something which I think the industry probably battles with too often, particularly when you look at a capital structure. The easiest thing to do is always just raise equity. Just raise equity. Doesn't matter what price, just do it. You need to recapitalize. Where actually we look at things a bit more holistically.
Yeah.
Partner with the management team, with the shareholder. Like, this is what you should be doing.
Yeah. So part of investing, especially when the times are really good and the market's at your sales, is when you should be thinking about, okay, what could go wrong?
Absolutely.
So we sit here today, we've got gold at almost $4,100. We've got a rare earth cycle that seems to be picking up traction because of geopolitical headlines day in and day out. Supply crunches on the base metal side, specifically copper. We don't know where the copper is going to come from. More mines coming offline. Seems like every 6 months or so. So things feel really good for the equities and the companies that you and I follow.
Yeah.
What on your table are you worried about? Where's the challenges as a concern?
Well, I think in time, particularly with gold, silver, demand destruction might come into play, or capital stops in terms of, all the crypto money. If central banks stop buying, what happens to jewelry demand at 4,100, et cetera, et cetera. Now, is that going to happen tomorrow? Probably not. But will it, result in a kind of debasement of where we are today? As in, will it drop a couple $100 pretty easily? It could. I'm not saying it's going to happen, but something like demand destruction, when prices go where they are so quickly, not only in that precious metal space, but also in the minor metals. As we've seen multiple times again, there will be a reversion to some sort of mean. Will there be a new level of where that is? Absolutely. But when, something goes from 1 to 10,000, things will settle down once the world kind of figures out the new supply chain.
Yeah.
I hate to say it, but governments typically get too greedy when things are too good. So will there be, new taxes, new royalties, new government ownership in mines? Probably. So, stick to jurisdictions which are unlikely to do so. However, we saw Australia do it before. So it's not, it's not all the same.
It's just not all centralized in West Africa.
Correct. So yeah, those are I think some of the kind of potential bogeys of this, and who knows what happens. I think the consensus on the US dollar is pretty one way, but you never know with the Trump administration, or what happens with other central bank, like the yen. Are they going back to Abenomics? Who knows what else will unfold in terms of how this space unfolds. I mean, look at what Indonesia has been doing in terms of their permitting side. So, in a way, watch out nickel. Tin is interesting.
That's up like 37,000 already.
Yeah.
Like the last time the last big tin cycle was like 2 years ago. And actually you and I were talking about Cornish, I think.
Yeah.
You guys work with Cornish.
That's right. Yeah.
Yeah. I mean, and tin's back moving higher again, but there's so much going on. It's not taking the spotlight like it did 2 years ago.
No, it's not. And I think, that's kind of what I like about uranium as well, is that nobody's talking about this recent rally.
Which is
as much as what
the gold and rare earths. This is like, okay, so this is hitting the masses. All right, where else can we give our attention?
Exactly. So yeah, tin looks fantastic. It is, the tin price is historically correlated with the semiconductor index, which is obviously going well, and all the various, I think it was $1 trillion of AI transactions so far. Yeah, I mean, uranium is quite interesting because it has been slowly building.
Are you all concerned about maybe the AI build out data, data infrastructure boom? I don't want to say collapsing, but maybe the
fizzling out.
Fizzing out. I mean, we know it's going to happen. Like, it is going to happen. When is anybody's guess?
Yeah.
There's just so much money, so much build out, but people are starting to question the economics of these things.
You have to. When you have, a new AI park costing $350 billion.
Right.
I mean,
and you're starting to see a lot of debt getting flown out in the semiconductor space now. You've got to start questioning these things.
Absolutely. And big infrastructure build-outs based on a theme which is just starting. And yeah, we've seen other stuff out of China which doesn't require as much data centers or activity in terms of the build-out. Of course, it's a potential issue of where we're ultimate hype at the moment. I mean, it's driving U.S. markets. Just anything AI. If U.S. markets are at a new high. Oh, it's AI is driving it.
That's a dangerous place. I mean, we are not immune to that.
Of course not. And it's not quite .com yet, but who knows?
Some people might disagree with you.
Some people probably will. I'm used to that.
Hey man, I really appreciate the time. Actually, I can't even. It's been over 40 minutes. It's been such a good conversation. You put out a daily note. I think it's a must read. It helps me watch the news, and then get a kind of sense of what you guys are working on. Tell us where people might be able to not only maybe inquire about that note, but maybe even reach out to you for questions.
Yeah, absolutely. It's actually available on our website, hannam.partners, or email myself, ja@hannam.partners.
Yeah, very good. What's how big's your calendar this week?
I don't even want to look.
It's a fun time though.
It is a fun time. Thankfully, a lot of people go away Thursday. So
yeah, very good. All right. Well, thanks so much, Jay. It's good to see you once again. Welcoming into the office, and hopefully we can do it again next year.
Pleasure. Thanks a lot.